The show now. The Dow Jones Industrial Average closed more than 5.5% lower overnight after panic selling on Wall Street. And we're now all eagerly awaiting how the market will open tonight. Of course, the FOMC meeting. For more on the impact of the US debt downgrade, we are joined by Professor Geoffrey Garrett, CEO of the US Studies Centre at the University of Sydney. Of course, our guest host today, Kieren Kelly from Sirius Fund Management. Firstly, Professor Garrett, thanks very much for your time today. I just wanted to gauge your thoughts on the reaction we've seen on global equity markets. Does it equate in part to a backlash against some of the policymakers in Europe, yes, but very much also in the US?
Yeah, I think that's absolutely right. You know, if you look at public debt ratios or how much the US has to pay, how much the US government has to pay to borrow on international markets, you'd say there's no fiscal crisis in the US. What I think we are seeing is a political crisis layered on top of a real economic crisis. You know, high unemployment, stagnant housing prices, low consumer confidence.
With that in mind, what did you make of the downgrade by Standard & Poor's? Was it justified and simply really bad timing?
Well, you know, the stories there look so bizarre. You have the downgrade coming out, then the Treasury says that Standard & Poor's missed $2 trillion. Then they change their assessment to say, well, it's not about today, it's about political gridlock on tomorrow. You know, I don't know whether the downgrade was justified, but we did see a flight back into Treasuries with yields going down. You know, this is a bizarre world we're living in at the moment, but I think the underlying reality is that for about the last 6 weeks, people have really started to worry that a double dip was likely, and I think the debt downgrade was the exclamation mark on those fears.
Kieren, the professor makes an interesting point, as he says. I mean, the issue at stake with the Standard & Poor's rating agency was the cutting of the credit rating, you know, the debt. And yet, when that happened, more people moved into and bought US debt.
Well, no, there's a very good reason for that, in reality, despite what that credit rating is, and this isn't an enormous credit rating, it's a notch, call it that. The Treasury market is the only game in town. If you're China, or if you're some of the other large economies that want to park offshore reserves, you've got to put it in US Treasuries. And what the US Treasury market is telling you, that despite the downgrade, you will still get paid, you will still get your interest on time, and that it isn't perfect, and the Chinese know this, it isn't perfect, but what else are they going to do? What else are they going to do? Yeah, the Chinese only alternative really is to start to invest in their own economy. And it's quite extraordinary that in a country that large parts of it are still mired in dire poverty, they would still rather invest in US Treasury bonds. And so that is, until an alternative currency and an alternative pool of reserve is found, it's the only place to be. And what people are telling you, and I'm a professional fund manager, so I can say this, I don't really care what S&P says. I'll form my own view about the US Treasury market. I invest in it. I have to invest in it on behalf of clients. I don't care what S&P says. S&P, after all, is the organisation that told us all these tin pot US investment banks and the products that they were producing were okay to invest in. Well, clearly they weren't. I reckon I know more about the US debt market than the people at S&P do.
Professor Garrett, picking up on what Kieren was saying, particularly in terms of China, some fascinating comments from China after the downgrade from Standard & Poor's. We know they have a tempestuous relationship, the US and China, and I would have thought adding fuel to the fire, suggesting that they're obsessed with credit and simply need to change their ways.
Yeah, I mean, that's true. But for years now, I've said about China, judge them by what they do, not what they say. So they've been bemoaning the US fiscal situation. They've been talking down the dollar. They've been talking about need for an alternative global currency. But since the beginning of the GFC in 2007, China has literally doubled their holdings of US Treasuries. So they do need to park their money in the US. They need the American consumer because that'll drive Chinese exports. You know, I think that from an Australian standpoint, the question today is, if the Chinese get spooked the way they got spooked in 2009, are they ready to do another massive infrastructure investment stimulus and bank lending stimulus the way they did then? If they do that, obviously demand for Australian iron ore would skyrocket again, and maybe we'd see the dollar rise.
Kieren, yeah?
Yes, can I ask you something, Professor Garrett, as a professional manager of money down here in Australia, on behalf of Australian families and businesses? It's been a pretty lonely fortnight, probably a pretty lonely month, caused by the US political system. Now, I've been a great student of Jeffersonian democracy for many years, and let me tell you something, I think it's broken.
Yep.
And when I sit here trying to manage money, I'm not worried about US companies. I love some of the companies. I love the American entrepreneurial spirit. I still think US Treasuries are okay to invest in, and so are the businesses. But the democracy is broken. It was built, Jeffersonian democracy relies on compromise, and the US political system now is so polarised and it's so ideological, it's almost Islamic, if I can put it in those terms. And if it stops working, I get really terrified. Could you comment on that?
Yeah, you're exactly right that the political system has stopped working, and the reason is that the divide between the left of the Democrats and the Tea Party Republicans is now a gulf, and that's what we saw in the debt ceiling stuff. You know, there was just no middle ground. Barack Obama tried to find it. John Boehner, the Speaker of the House, tried to find it. They both got burned. You know, I think unfortunately, what we're looking at now with the deal they did last week is that this issue's not going away. At the end of 2011, we're going to have to look at a couple of trillion more in spending cuts. It's going to get very nasty. There's going to be a balanced budget amendment voted on in the US that looks crazy. What I'm increasingly thinking, actually, is that it's going to be Obama versus the Tea Party maybe for the next 12 months. And then in the middle of 2012, look for a Republican like Mitt Romney to come onto the stage and say, listen, I'm the only one now who can lead the United States. So, you know, Barack Obama's re-election prospects aren't looking very good, because I think he's staring down the barrel of more fighting with the Tea Party in an environment where, you know, there's just no evidence that the unemployment rate is going to come down anytime soon.
It's a crucial backdrop to it all, isn't it, Professor Garrett? The idea that they are moving, obviously, into this presidential race in 2012. Do you think that this will be and is it being seen already as a big negative for the Obama presidency?
You know, Obama made a bet that 6 months ago looked pretty smart. Today it doesn't look as smart. The bet he made was that defending the big American welfare state programs, Medicare and Social Security, would be a political winner for him. That allowed the Republicans really to set the agenda on fiscal policy, and we can see what they've done. I don't think Obama anticipated, you know, this crazy Tea Party-ness, or crazy like a Fox Tea Party-ness. He probably also thought that the unemployment numbers were going to continue to improve, and then they turned down in June. So I think everything has gone badly for Obama, certainly in the last couple of months, in ways he didn't anticipate. And now it's hard to see how he can dig his way out. He's got to hope the economy turns around. Investors are sitting on their hands. That's why we're looking at the Fed tomorrow and the Open Market Committee meeting.
I'm glad you brought that up, with obviously the quandary over the fiscal situation, fiscal policy in the US. How much importance does the monetary side take, and of course the Fed leading the charge there?
Well, obviously, you know, what we know from those Treasury bill yields is that the US can borrow more money. There's just no political will to borrow more money. So if you need stimulus, it's got to come out of the Fed. Interest rates are near zero. That's going to continue. So really the only weapon left is thinking about a QE3 in an environment where nobody believes QE2 worked. So, you know, what do you do there? Ben Bernanke, I think, the chairman of the Fed, has actually helped the government because of his dual mandate. He's got to care about employment as well as about inflation. So Obama and I think the world are going to be looking at the Fed tomorrow to see whether they're willing to step up again.
Kieren, your thoughts?
Well, I'm in the QE2 camp, didn't work mentality. I'd hate to see the United States go down that route, because it's throwing petrol on the fire. You need political reform in the United States, and you need serious political reform. And I think it's actually more important than anything that's going on in Europe. I think it's more important than the relationship between China and the US. I've been through so many of these crashes before when the United States has been written off, and it's always been the United States that pulls us out of these slumps. And it's the most innovative country on earth. It's the best utiliser of capital. It's got correct usually it's got correct capital market pricing mechanisms that are lacking in places like China, and it's always had a functioning democracy. At the moment, it has not a functioning democracy. So you might get little rallies in this, but until the United States gets back on track politically, we ain't any of us going anywhere.
All right. Unfortunately, we could talk all day. We'd have to leave it there. So a big thank you to Professor Garrett for his time today. Professor, thank you very much. Always appreciated.
Thank you.